What's up to all my Joe-dolls? If you're new to the channel, welcome and thanks for tuning in where we focus on finance, real estate, and other life topics. Be sure to hit the subscribe and notification bell as I'm posting valuable new content on a weekly basis. Alright, so today I want to discuss investing, how to start investing today, and what are investments. My goal in this video is to give a high-level explanation, breakdown of what investing is and why it's important. I will also cover some investing options and strategies. Now, the timing of this video is ironic as yesterday the stock market suffered its worst day since March, with the Dow Jones plunging more than 1,800 points. Now, I had already planned to release this video, and this current breaking news was unexpected. In any case, the fall in the stock market yesterday likely happened due to concerns over a second wave of the virus, and as I discussed in my video yesterday, the economic outlook by the Federal Reserve. Be sure to check out that video if you want more information. The long story short, Fed Chair Jerome Powell indicated we will have high unemployment and does not foresee a full recovery into 2022. Alright, so now back to the original topic of the video, which is investing. So you may already know investing is important, but you may not know why, how, what, when, or where to begin. But the good news is that you've come to the right place because I'm going to break it down for you guys. So to start off, I want to discuss what are investments, what exactly is investing. So you may have heard the expression, you need to invest, and ask yourself, what does that mean? So guys, when you invest, you are committing money or another resource in the expectation of some future benefit. A college education, for example, can be considered an investment because you invest your time, a resource, in hopes of earning a degree and a good job after graduating, which is the future benefit. Now, when it comes to finances, investing means that you commit money to a financial asset or security, such as a stock or bond, in hopes of receiving even more money later. So the potential of receiving more money, growing your money, is the reason why people invest in the first place. So essentially, guys, investing is a long-term strategy to help you grow your wealth and pursue long-term goals like paying for a down payment on a new house, funding your retirement. With investing, you accept more risk in exchange for potentially greater returns over time. So now that we've discussed exactly what investing means, let's discuss more on why people invest. So one of investing ingredients is compounding, also known as compound interest, which occurs when you reinvest the investment earnings, potentially to generate more earnings. Now, Albert Einstein said that compound interest is the eighth wonder of the world. So for example, let's say you invest $10,000 when you're 25 with a 5% return on that investment compounded annually. You have $70,400 at age 65. The key takeaway here is that the earlier you start investing, the longer your investments have to generate more income. So you may be wondering how investments make money and what are different investing options. Let's dive into it a bit. Most investments earn you, the investor, money through appreciation, interest payments, or dividends. So appreciation means that the value of an asset has increased. So for example, if you purchased a collectible item for $100, and let's say that 5 years later it was worth $500, then that collectible item appreciated in value. Now, securities can do the same. So a stock issued by a company can increase in value over a number of years. Another example is if like you paid interest payments on a loan you've taken out, whether that was like a student loan, a car loan, or even a mortgage. Those interest payments that you paid to the lender, the bank, were how the lender bank earned money on that loan or investment. One type of security that issues interest payments to its investor is a bond. So when you buy a bond, you are lending money to the government or a corporation who promises to pay you back and make interest payments on the amount you lent. Another type of investments is dividends. So dividends are issued as a payment to investors, but they are made by companies whose stock or equity that you own. So public companies issue stock to raise money for business activities and let investors purchase these stocks. So if you own stock in a company, that company may also issue dividend payments as a way to share its profits with its investors. This is on top of any addition to any appreciation in the value of the stock. So certain companies such as Universal, Chevron, Whirlpool, and a host of other companies offer dividends to their investors just for owning their stock. In a sense, it's a type of reward or thank you from the company to you as the investor for choosing to invest your money with them. So there are a lot of options when it comes to investing your money, but common investment options are stocks, bonds, mutual funds, and exchange traded funds, also known as ETFs. So stocks are shares of a company, also known as equity. With stocks, you essentially own a small portion of a company when you buy the stock. Now, bonds are small loans given to a corporate or government entity. So if you purchase a bond, you are promised repayment plus a set rate of interest for a specific period of time. Now, mutual funds are a type of investments fund that is professionally managed. You and other investors contribute to the fund, and the fund manager invests a large group of assets, generally stocks and bonds. Now, ETFs are like mutual funds, but instead of investing directly into a fund, you buy shares on a public exchange, similar to buying stocks. So now that we have discussed investing and the different investment options available to you, you should think about your investment strategy. So rather than just throwing your money into the market, you may want to consider an investment strategy. I hope you guys are still with me, and if you are enjoying the video so far, please smash that like button. It really helps with the YouTube algorithm. Alright, so an investment strategy outlines how you diversify your money among various investment options. Strategy should be guided by 4 things. Your financial goals, whether it's purchasing a new home or sending your kids to college. Knowing what you want to achieve can help you make the most of the money you're investing. Also, your age and timeline. So the longer your timeline, the more investment options you have and the more aggressive you can be when investing. Now, another factor is your risk tolerance. Every investment comes with risk. Generally speaking, the greater the risk, the bigger potential reward. So understanding your preferred balance of risk and reward is the foundation for your investment portfolio. Questions to ask yourself or discuss with an investment advisor include how you want to invest. Would you like to work with a financial professional? Would you like to invest on your own, or a combination of both? All right, guys, so far we have discussed exactly what investing is, why it's important, and the different type of options. So now let's discuss how to get started. So one of the easiest places to start investing is through an employer-sponsored retirement account if you have access to one. So things such as a 401k, IRA, and 403b account. Plans are comprised of portfolio investments. Contributions are made from your paycheck with pre-tax dollars, and many employers match contributions up to a certain amount. So some employers may offer a 3% or 6% company match, which is essentially free money. So if you had a 6% company match and you contributed 6%, that would give you a 12% contribution. Now remember, in addition to contributing the most you can, the earlier you start, the better you are over the long run due to the principle of compound interest. Now, Joe-Dolls, I can tell you for myself, through the power of compound interest and consistently investing money every month, I've been able to create a solid 6-figure retirement portfolio. And to be honest, I've been surprised myself at times to see the rate of growth. I mean, last year my investment portfolio had a personal rate of return of 23%, but this year I'm down 13%. So remember, you have to take the good with the bad. Now, if you're on the younger side and have time, I would say not to worry so much about the day-to-day and think long-term, the next 10 years, 20 years, 30 years. So by consistently investing even small amounts of money, it will make a huge difference over the long run. Now, I have to point out that retirement accounts come with annual and yearly contribution limits. So if you've maxed out your annual limit or have other goals you want to work towards, you may want to consider non-retirement account options. Now, some great investment apps for 2020 include Robinhood, which I use myself, and Acorns. Now, Robinhood is simple to use, very user-friendly, and is now offering $0 per trade. The thing I love about Robinhood is the ability to purchase fractional shares, meaning you can invest in thousands of stocks with as little as $1. You no longer have to save up hundreds or thousands of dollars to invest in companies such as Amazon, Target, or Apple. I mean, guys, this has changed the game. Investing is not just for those who are rich and have a lot of money. With apps such as Robinhood, anyone can start investing and growing their wealth. Now, another app is Acorns. Acorns allows you to invest your spare change and has a monthly commission of anywhere from $1 to $3. You can invest automatically by investing your spare change. If you opt into this feature, unless you invest as little as $5 anytime on a recurring basis into a portfolio of ETFs. Your investments are then diversified across more than 7,000 stocks and bonds, and Acorns automatically rebalances your portfolio to stay in its target allocation based on your investment strategy. So this allows you to control your risk level. Now remember, guys, the goal is to start.
Just start.
If you are someone in your 20s or 30s, which most likely you are according to my YouTube analytics, the best thing you have going for you right now is time, your youth. So Joe et al., what are your thoughts about investing? If you are investing, what type of investments do you have and what is your investment strategy? Please comment below. Alright, so I know we covered a lot of information in this video, but I really hope you found value in it. If you did, please give it a like and share it on your social media and subscribe to the channel. Alright, Joe et al., thanks for watching and until next time.